Welcome to the News and Views podcast by the Fintech Times. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFT News and Views and follow us at the Fintech Times.
Hi, I'm Polly Jean Harrison, features editor at the Fintech Times.
Hi, I'm Francis Bignell and I'm a journalist at the Fintech Times.
Hi, I'm Tyler Smith and I'm a journalist at the Fintech Times.
Hello and welcome to the 100th episode of the Fintech Times News and View podcast. That's where we'd put the air horns if we had them. An amazing milestone. Thank you, Francis. What an awesome milestone to hit. And I mean, who'd have thunk we would have ever got to 100? But yet here we are. So Tyler, Francis, how are you guys doing today? Tyler, what is up? Happy 100th.
Gosh, I am so emotional right now, Polly. I can't believe it's episode 100. Who'd have ever thought we'd cross this line? But here we are, episode 100. I might go out and buy a supercar just to celebrate or something like that. But yeah, very good today. How is everybody else?
Amazing stuff. Yeah, definitely get that car. And Francis, how are you doing?
I wish I could get a supercar to celebrate this. I don't think I'll be able to this time around, but never know. You never know. Yeah, I'm very well. It's been, once again, a very, very cold week here. I don't know about you guys, but I was just trying to have a quick look to see how many episodes we've done since Tyler and I joined. I feel like it's got to be 40, 50? Because you used to do this, what's it called? Man the ship by yourself, didn't you, Polly, back in the day?
There's been a lot of different iterations of the podcast. It started even before I joined the company with Mark, Dom, and Manisha who used to do it, and then it was just me and Manisha and Dom, and then it was just me. So it's taken a bit of a journey, but I feel like the podcast where it's at now is really fun and super cool. So I think we've done really well to get where we are.
We started on episode 56.
So yeah, nearly.
What?
We'll have to celebrate again when it is.
Yeah, 106.
goodness.
106 will be the big
episode.
one.
So yeah,
Oh
forget
my
it now.
gosh.
Cancel the celebration. Episode 106. That's the main one. But anyway, guys, what are you going to be talking about today? We've still got a job to do, even though it's very exciting. What you bringing to the table, Tyler? What are you bringing?
Well, Polly, this week I'm going to be going down under, looking at Australia's big four banks and their current level of stablecoin development. So that's really, really fun. We got a big announcement coming from one of those. And yeah, we're going to be looking at that. What about you?
Fantastic stuff. I am going to be looking at how fintechs can attract and retain their talent, especially in the economic situation that we have at the moment. And then Francis, how about yourself?
I'm going a bit rogue today. Normally we get one article and we sort of take a deep dive into it, but today I'm going to be talking about a topic rather than just one article, and it's going to be on crypto hacks and the security of crypto exchanges.
All very exciting. Who wants to go first then? Since it's 100th episode, any volunteers?
I'd like to just get mine over and done with. I think I
mean, that's an attitude to have, but you go ahead, Tyler.
I submit myself as tribute. As anybody who's read The Hunger Games will get that reference. So yeah, I mean, as I just mentioned in the intro, we're going to be looking at stablecoin development, specifically within Australia. We've had a lot of movements in the space at the moment. If we look at the big four, we're going to just run through them very quickly. We have ANZ, which is obviously one of the big ones. We have Commonwealth Bank of Australia, there's Westpac, and finishing off is National Australia Bank. So this is a really, really interesting story. Basically, the gist of this story is that National Australia Bank has become the second of the big four to launch a stablecoin. The stablecoin is pegged against the Australian dollar. It is backed by the bank's own reserves of capital, which is really, really super interesting. And its creation is intended to be used more as like in a settlement kind of sense. Speaking to the Australian Financial Review, which is where the news was first debuted from the National Australia Bank, Howard Silb, which is the Chief Innovation Officer of the bank, explained how its applicability could be extended to carbon trading, overseas money transfers, and repurchase agreements. Personally, I've never had to send money to the APAC region myself, but I can see how stablecoins would provide a fantastic solution for that. So he's really sort of on the mark with that. The report made by the Australian Financial Review, as I just mentioned, also indicates that the stablecoin developed by the bank might be an efficient and cheaper transaction service than imposing interbank cross-border payment solutions offered by Swift. So that would be a really, really big bonus. If we sort of just spread it out in like a look at the sort of wider crypto market, I'm sure this will come as a surprise to no one that the market is very, very volatile right now. Capital is at risk. They're hoping that this stable coin will just be a little bit of an easier way to sort of maybe dive into cryptocurrencies a little bit without the volatility. And because it's backed by the bank's own capital, that should be ensured. What's really, really interesting is if we look at the wider activity in stablecoins of Australia's Big Four, as we mentioned in the beginning, actually National Australia Bank lost out on the first place to its rival bank, ANZ, which executed its first transaction using a stablecoin back in March 2022, so almost a year ago. So it hasn't, I wouldn't say, it's lost out, but it's definitely behind its rival. Then if we look at Commonwealth Bank of Australia, they have dabbled in the cryptocurrency space. It did have a pilot of its own stable coin that concluded last year. However, unlike National Australia Bank and ANZ, the bank has yet to release its own stablecoin. This was indicated in Cybos 2022, which I attended in Amsterdam last October. And Sophie Gilder really, who is the bank's managing director of blockchain and digital assets, during one of the talks, she really discussed how the regulatory framework around stablecoins might make it unattractive. For example, for regulated financial institutions to hold stablecoins, other regulations could also impact who can issue the stablecoin. If we look lastly at the last of the big four, Westpac, it is also slowly sort of moving into the stablecoin space. The bank did mint a stablecoin as part of its internal pilot into the technology. This pilot was conducted last year. However, it too has yet to decide whether to issue a stablecoin or not. For reference, if you do look at the article, we had a really fantastic comment from the CEO and co-founder of Wallix, Simone Mazuka. Sorry for butchering his name, but he really talked about how stablecoins was almost like a stepping stone into the wider crypto, a stepping stone into the wider adoption of crypto is what I meant to say. So I think in terms of what they were talking about in the abilities of the stablecoin to act as sort of a settlement purpose, I think that's really, really interesting. And I think that because it's backed by actual capital owned by the bank, that I'm hoping that clients really do see that this, is worth their time and worth also their capital as well. Do you guys think that Australia will be seeing stablecoin transactions in real life anytime soon? Do you think that the National Australia Bank's movements into a stablecoin was the right decision to make? And lastly, how do you think this will impact the volatility of the wider crypto market? I think I'm going to put Francis forward because I know that he's always really, really good with stuff like this. Francis, what was your take on this story?
I think you're giving me too many plaudits there, Tyler. I wouldn't. I don't know, but I thought the story was really interesting because it's this continued attitude, which is this growing sort of digital first mentality that I think we're seeing sort of all over the globe, really. And I mean, I was working on a story which is actually one that I'm going to be discussing. Or actually, no, it's not the one that I'm going to be discussing. But I was working on a crypto story recently, and it was just looking back through sort of the different regulations and sort of the different attitudes toward cryptocurrencies and in turn stablecoins across the globe. And when I looked up, or when I heard that you were doing the story, I looked up on Global Legal Insights, sort of the general attitude and sort of I'd say it's a very good place to find the sort of in the know stuff, other than the FinTech Times, of course, because I'd say we're the top dogs when it comes to that sort of stuff. But they're in here they sort of describe quite clearly that Australian law does not equate digital currency with fiat currency and does not treat cryptocurrency as money. The Reserve Bank of Australia, Australia's central bank, indicates no immediate plans to issue a retail CBDC, but has indicated a perceived use for wholesale CBDCs. CBDCs are central bank digital currencies. And I think that, the development of stable coins and sort of the continued use, as you mentioned in the article, Tyler, that I believe it was ANZ, right, that made the
Yeah.
first transaction using stable coins. I think that is just a sign that, the attitudes are shifting. And while the country is generally quite neutral towards digital currencies currently, the more they're used, the more that they're going to have to be recognized and regulated and sort of given this more attention that you might see in other countries right now. So, in short, I think it is sort of a positive sign. I mean, at the end of the day, the more options you have when it comes to dealing with finances, I don't ever see that being a downside. The only potential downside is it can be difficult for companies to comply with everything. But I think that is something that you should be willing to undertake if you want to be successful. Because at the end of the day, the more options you have, the bigger the pool of customers you can have, and sort of the continued use of stable coins, I think, will be very beneficial for everyone really in the long term. So yeah, I think it's a really good and progressive move by the National Australian Bank.
You're bang on the money there, Francis. I mean, if there's anything that's really clear from customer conscious right now is that they really would like more ways to pay. I think, as you put it, across the globe, we're really seeing that. I do agree with Sophie Gilder and in what you said as well in about sort of like the regulatory approach to it and how that would be problematic. I think that in terms of innovation and new product releases like this, I think that regulation is always sort of like one of those points where you sort of have to tread carefully in the beginning. And I think personally, as the regulation becomes realized in Australia and indeed across the rest of the world, I think that we will see these sort of stable coins and alternative tenders come more into use. But I really think, and I agree with you and Sophie, that the regulatory framework really needs to be in place first, because you can create something, but if it's not regulated, I think that's sort of like the first pitfall of widespread adoption. Polly, what's your take on this?
Yeah, I think the development of stablecoins is a really interesting reaction to the crypto market, swinging, and particularly at the moment, with a lot of swings happening. I think the sort of creating the digital currency that kind of provides a solution to all of that, while giving you the benefits of digital currency, like decentralization, and things like that, is really interesting. And I think it's really interesting that Australia now have two stable coins by their major banks, which again is a very, again, I'm saying the word interesting a lot because it is really interesting. It's something that definitely to watch and to see, and to definitely see how they do it and how the rest of the market can sort of follow along in their footsteps. I personally, I really quite like stablecoins, but then I'm also not necessarily a crypto nut or a digital currency nut, so I'm not fully understanding of the whole thing. But having stuff that's backed by fiat currency and pegged by certain coins just seems to make sense to me. And really having that resistance towards volatility that we've seen so many times with Bitcoin and other cryptos just makes a lot of sense when you're thinking about using cryptocurrency as sort of like a payment method. If you want to do cross-border payments and things like that, you were saying, Tyler, that makes so much sense to have it pegged and have the value be somewhat reliable, rather than using a cryptocurrency where the value is anything but reliable. And I guess again it comes back to the whether you're using crypto as an asset or as a payment method, because those are very two different things there. It'd be really interesting to see what other stablecoins crop up. And I know it all kind of ties in as well to this journey we have on the way to a central bank digital currency. Especially in the UK, there's a lot of noise around that at the moment. So it's all really interesting, and I do think we're probably gonna get a future where stable coins or some other digital currency, whatever that may be, are going to be pretty commonplace and pretty well used when it comes to payments and other things like that. So it's one to watch, right? It's really one to watch.
Yeah, you're both actually bang on the money, I would say. I think, with the addition of this stable coin into the Australian market, I think that will really encourage innovation and competition. And I think it will encourage the other remaining parties of the Big Four to really put their foot forward and progress in this space. I think, stable coins, I don't know. I think there needs to be a little bit more education around what they are within the wider public for this to be successful. But it's a starting point, and everybody needs to start somewhere, right? So, you know what? Well done on Australia, and we should have to watch this space.
I think as well, just on that point, is that, you know, stablecoin education, I think it's just digital currency education, really, isn't it? I mean,
Oh, yes,
we speak
absolutely.
about it
Yeah.
all the time, but it is so true that people just don't understand the use cases. And I think once those become a bit clearer, then people can be more confident in where they put their money. And then in turn, hopefully that means you won't have people like, I don't know if you guys remember when Terra Luna just completely blew up, and you saw people on Reddit discussing how they'd lost their life sort of savings because they'd put it all in a cryptocurrency. I feel like if people actually understand cryptocurrencies and their use cases a little bit more, then they'll hopefully see that, I mean, that's just, I think, investing 101 really is diversify your portfolio anyway. But I don't know. I think that investment and sort of the security surrounding it, I think, are big things that people need to be educated on.
Absolutely, absolutely. And especially in their sort of specific use cases for this stablecoin specifically, I think there needs to be a little bit of hand holding from the banks in terms of how the consumers are able to use it and its applicability within the wider payments landscape. Very, very interesting. Very, very interesting movements from Australia. Who's next?
I was going to suggest that I could go next because I think my story ties in quite nicely, if that's all good with you, Polly.
Yeah, you go ahead.
So, I recently received an email that informed me about a Coinbase lawsuit, which instantly sort of took my attention because we don't usually see these big names sort of being sued for individual sort of cases where people have been hacked. However, it was making a case that three plaintiffs have had their accounts invaded. Essentially, they've been locked out of their accounts, and they lost all their funds. And I'm not talking just a couple of £100 here. We are in the hundreds of thousands. It's big. And the essentially what has happened is Coinbase are being sued or sorry, there's been a complaint that's been put against them. Two separate complaints. The first is being that there needs to be a way to reimburse these people because up until now, from what I've understood, there hasn't been any response from Coinbase. And secondly, they've essentially had to deal with the fact that in their promotional in their promotions, I suppose, they've been saying that they have bank level security. Now, if you're getting hacked as easily as they have been, I don't think that is bank level security. And this is the thing, is that they have to either enforce their security systems and improve them, or they need to stop promoting themselves as saying that they have this bank level security, right? Because it's misleading for new customers and investors who don't fully understand cryptocurrency. And this is why I thought it was a nice sort of segue from Tyler's article, because there is still not a widespread understanding, I don't think. And after seeing this, I wanted to sort of I researched to sort of see how much crypto hacks have really changed and so on. And new data from CoinJournal found that there's been a 27.66% rise from 2021 of incidents of crypto hacking. And these attacks managed to seize a total of nearly $2.28 billion. And that is just a ridiculous amount as well. When you think about how much people are they're confident in these exchanges and in these systems to protect their money. And when you're seeing that vast amount of money, sure, it's over a large amount of people, but that's a crazy high number. And we've done a lot of articles on this at the FinTech Times. I mean, you see companies like Elliptic who are launching solutions to combat the $4 billion illicit crypto problem in the current market. And again, Solana and Nomad have been added to the list of victims from crypto hackers. And it really is something that we've seen over the last few years, and it doesn't seem to be going away. So I guess the main thing I wanted to discuss with you guys is, you know, is there sure Coinbase have been called out here, but they can't be alone in this problem. They're not alone at the end of the day. So what I wanted to discuss really is, what do you think the next steps forward are? Is it improving security measures? Is it just not advertising that they have these incredibly good security measures? What is it really? And I have to sort of caveat as well that this isn't necessarily the case is ongoing as far as I'm aware, and the Coinbase, we reached out for them for a comment, and they're yet to provide one. But yeah, what do you guys think? And this doesn't necessarily need to be about Coinbase specifically, but just about crypto exchanges and crypto platforms in general, the security that they're providing, and how confident people should be about saving their money. Tyler, what do you think?
Well, I think we spoke a little bit about this. It sort of reminded me of what we were talking about last week. You remember I was talking about the infrared payment sensor thing for your hand. We spoke then about how, is anything in this industry ever truly safe? Is it ever truly secure? And I think it's sort of the same for crypto exchanges. I think that crypto exchanges almost need to keep the pace with fraudsters, with cyber criminals, because in that way they'll be able to recognize what their activities are, how they're targeting people in their own industry, either vertically or horizontally, and likewise how they'll be able to react to that. I think that's. I mean, we don't work for a crypto exchange, so it's sort of hard to talk on their behalf. But I think if exchanges had this insight into how criminals are behaving and the techniques that they're using, I think that they can mitigate the risk of lost assets in this way. I mean, I know that it's been sort of quite a tough time for Coinbase recently. They're also facing another lawsuit, which I believe is from the Flare network. Coinbase failed to distribute its native token FLR and the associated Songbird token as well, and that's actually been filed in the Northern District of California in the United States. So it's sort of it's not having a very good time in court today, is it? Really, the Coinbase company. But I think there needs to be almost like a better reaction, a better response to rising fraud cases in the crypto industry from these exchanges.
Definitely, and I couldn't agree more. It is not a fun time to be Coinbase right now, but again, they're not alone. They are just unfortunately a big name, so therefore they are the ones that are recognized. But it's not just them that are facing these issues. A big point that I think you made there, which I found really interesting, is this idea of exchanges and organizations adapting to new criminal threats by almost seeing what the criminals are doing first. And I saw an article, and I can't remember where it was now. I was trying to find it while you were talking, but I no dice. Essentially, it was saying that organizations are going to almost be sending in these undercover spies into the dark web, essentially, to look up how criminals are looking to gain access and sort of into these forums that are discussing ways to exploit organizations. Essentially, it doesn't even exclusively need to be cryptos, but I thought it's a fun thing just to think about. Like, I don't know about you guys, but the sort of like this undercover agent almost type of thing behind enemy lines, it seems very sort of Hollywood, but I think it's quite cool that this is something that is actually taking place, or not, for any cyber criminals out there.
Or keep your friends close and your enemies closer. That's what
There
they
you
say.
go. Look, there we go. But yeah, no, I think it's just an interesting sort of take and sort of way to deal with the growing fraud problem, I suppose. Polly, what are your thoughts?
Yeah, I mean, I really agree with everything that you both have already said. I think the problem of cybercrime and fraud is such a huge issue that it's really hard to come up with sort of one quick fix, even when you are a massive crypto exchange or similar. And I guess it come down to regulation. I know it's kind of what we all talk about when we think about crypto. We start thinking about regulation as well. I know there are some people in the industry who think quite critically of regulation. Is it sort of overreaching? Is it counterproductive? Should you just let things get on with things? But then at the same time, fraud isn't a problem that just goes away. It's not necessarily a problem that fixes itself. So it's just a really interesting sort of thing. And I know there's been quite a, like you were saying, Francis, there's been quite a big crackdown on quite a few cryptocurrencies at the moment. So I wonder if that's kind of a turning point into what we can expect in 2023 or even beyond from crypto, in this crackdown, and whether there does need to be more caution into anyone who is thinking about either getting into crypto or even staying in crypto. I would be a little bit apprehensive if I had some crypto assets at the moment, and I would be a little bit worried about them. But I mean, does I feel like it does all come back down to some kind of education, not to harp on again, because I know it is all we talk about in financial education, things like that. But you've really got to understand the risk when you start playing with crypto, right? You've got to know nothing is certain. You can lose everything, like you were saying, Francis. You can lose your whole life savings if you put all your life savings into crypto. It's just something that can happen to you. And I guess from a consumer standpoint, it's really important for people to understand that. But even from someone more experienced standpoint, an expert standpoint, whatever, it's important to understand what these risks are. And I guess crypto exchanges are just kind of doing their best to mitigate. Well, you'd hope that they're doing their best to mitigate them, whether these lawsuits suggest otherwise. But yeah, it's a tricky situation, one that I don't think anyone really has the answers to. But hopefully it doesn't get any worse.
I think that's the key point really, is hopefully this sort of sets a precedent that's going to, go forward, and that if we do see these sort of hacks take place, I mean, you'd like to think that if they do take place, that the organization, and again, this isn't only exclusive to Coinbase, but they're in the limelight, and it's that the people that are affected are helped, and their funds are able to be recovered. But I mean, of course, that isn't always possible. But I think it'll be interesting to see how this pans out. And yeah, Polly, why don't we go to your article?
Amazing. Thank you so much, Francis. A little bit of a diversion now from cryptocurrency, as we've had from both of you. But I wanted to look at sort of talent and retention, which sounds incredibly exciting, but I assure you it is. So essentially, it has been a little bit dicey when it comes to fintech funding at the moment, and that combined with the general economic crisis we're receiving just over the globe, it's becoming quite a challenge for fintechs to stay competitive in the employee market. And I think that's something that everyone has really been seeing at the moment, not necessarily just for fintechs, but across all sectors. But we had a really fantastic piece written for us by Richard Arundel. I'm hoping I'm saying your name right. I do apologize. And he's from Currency Cloud, and he wrote us a really great article on the topic, highlighting how attracting and retaining top talent is really crucial for the fintech's continued growth, which is obvious. You want to get new people in, new ideas in, new innovations in. That's how you stay growing. And so, obviously, with the economic situation, a lot of employees are becoming cautious about leaving their established roles and their current roles, and fintechs are starting to have to really work harder to convince new hires that they're an attractive and safe destination. So there's kind of a whole attitude shift, right, with the current economic crisis and the funding landscape being the way it is. A lot of young fintechs and a lot of new fintechs are having to really show great profitability and cost efficiency, and as well just kind of prove that they can do it, that they can be a fintech company. Because at the moment, that with a lot of people going down and things like that, it's really difficult. So for fintechs to position themselves as a safe bet in the current landscape is difficult, but is kind of the best way to ensure that they get the best talent. And this whole concept of being a safe bet is what the article described as being pretty key, reassuring potential new employees that their trust is well placed in moving to them. And also, he kind of went on about how retaining the talent is just as important as attracting it in the first place, investing in staff skills and organizational health being really key to higher productivity and stronger retention. And then lastly, just before I get your guys' opinion on this, Richard Arundel also kind of went into how fintechs focusing on purpose is really important as well, and how fintechs has always really been ahead of a lot of sectors when it comes to purpose, and kind of a lot of fintechs are purpose built, right? That fintech has always been about solving problems, and that kind of leads into that, and that is kind of key to creating better culture within employees, because the reason why they exist is their unique selling point, and they can get a lot of benefits from that by having a clear key thing that they're trying to do and the problem that they're trying to solve, and so that makes their employees or potential employees a lot sort of keener to be involved in the company. So I've talked a lot, I realize that, but I just thought it was a really interesting thing to think about, the idea of talent and getting new people in and new innovation in. So I just wanted to bring that to you guys and see what you thought about the whole thing. Are there things that you think fintech could be doing to help retain talent and help get their new talent in? Do you think that it's going to become a bigger problem this year, especially as sort of things go on with the cost of living crisis and everything else? What do you guys think? Francis, I'll go to you.
I thought it was really interesting when you picked this article, because we've sort of focused on, I guess, talent retention a few times. But one of the biggest things I think now, especially, is, I mean, maybe it's taking a different approach, but one of our contributing reporters recently published an article called "Fintech Can Be a Brutal Workplace, but Are the Toxic Claims Over-Egged?" And I think it's a really sort of interesting viewpoint to sort of almost take the negatives to analyze sort of this fintech talent retention. And it's the way of looking at just the talent in general. And that is in the sense of how many people are willing to get into fintech, and what that I think impacts why people may or may not want to stay at certain positions. So there is a link there. I mean, it's a stretch, but there is a link. And I think one of the interesting points that the article pulled out is that, startups can be brutal first and foremost. And then a quote that we highlighted was, some fintechs have a reputation for a growth at all costs mindset, which is synonymous with burnout. And I think if a company has that attitude, it's not going to be able to retain talent, which is, especially when you're talking as fintechs as a safe bet, is it, you've really got to weigh up, like you said, this cost of living crisis, which is obviously going to have to make you think about finances. But if it's affecting your mental well-being at the same time, there's got to be a fine line between money at all costs versus, I suppose, depression and anxiety as a result of it. And another interesting thing that the article points out is that, of course, fintech has historically been a very sort of straight white male, industry, really. And although that is changing, and it's very good that it's changing, because we're seeing more diversity. Ben Rosen, founder and CEO of a recruitment firm Inspiring Interns, noted that recruits are often concerned with the low gender diversity pool of the fintech industry. Most of our recruits are millennials, who often regard contribution to business and ethical values as the top of their list when choosing a company to work for. And I think that's another really big thing that companies need to enforce to sort of keep this talent retention, that, as you mentioned, Polly, in the article, is it needs to be a welcoming environment, and an environment that makes people want to stay there. And I think if it isn't really hitting those key points, then it may be a safe bet, but at the same time, again, if it is this sort of toxic environment, I don't see why you'd want to stay there anyway, if you know what I mean. So I think there's a few different viewpoints that sort of impact talent retention, as well as sort of just the safe financial option.
Yeah, absolutely. I'm really glad that you brought those points up, because I think those are both really, really good points, and especially the kind of mental health burnout one, because I know there was quite a bit of a buzz about that a little while ago, particularly when Tom Blomfeld left Monzo because of burnout and mental health issues, and I know that's always been a bit of a sticking point within fintech, this hustle culture that everyone has, because everyone wants to make it, right? Everyone wants to be the fintech that makes it and delivers on what they said they were going to deliver on. But Tyler, what do you think on this?
Well, I think it's been a massive time for the tech industry as of late. I mean, last Friday I saw the news that Google was laying off quite a few of its employees. This is followed, of course, by various announcements across the fintech industry of layoffs. I think in terms of employee retention, I agree with everything Francis and you have said so far. I think that, you know, as borrowing capital becomes ever more expensive, companies and especially fintechs are finding it a lot more difficult to facilitate these benefits. For example, we looked in one instance where private health insurance was seen as a massive employee benefit, but in order to offer that, you need to have the capital, or at least be able to borrow the capital to satisfy that benefit. Right? If that capital is becoming more expensive, alongside other business costs, i.e., paying wages, paying office rent if you have an office, paying your investors. I think that it puts a lot more pressure on fintechs to be the best. And then if we look as well in terms of the market capacity, we see a massive saturation of fintechs in the market at the moment. And I think it's a little bit of like survival of the fittest, like only the best fintechs will be able to retain slash attract the best talent. I think everything is really connected in the industry, and as we see sort of the ongoing crisis, we see a lot of borrowing has become much more expensive, and I think these benefits are going to be a lot harder for fintechs to provide, and in turn, I think that will translate into how well they're able to retain their talent. I always believed that it was best to be working on something that was really unique and really special. And I think that if employees are recognizing that you're working on something really special, or they're working on it together as a team, that would be um, that would be worth something staying for. So I think if we look in terms of fintech innovation, I think firms almost need to be entirely innovative on their own to see that they're able to keep the people that they want and the people that can actually do the job. And I think this whole story is just really a perfect definition of how everything in the economy is connected and what impact it can have, especially on the workforce.
Amazing, yeah, Ty. I think that was all really good points, and I guess it's another thing to add to the list of let's hope that this economic situation sort of ends quicker, sooner rather than later, and hopefully we can get back to some kind of normality, and hopefully this situation will all start to resolve itself as well. But thank you so much, guys, for bringing those articles to the table. If you want to hear any more about anything we talked about today, head on over to the Fintech Times website, where you can read plenty more news and insights all about the fintech world. But very quickly, then we will move on to what I learned this week. So each week we like to discuss things we've learned every week, since so much new information crosses our desks being part of the editorial team at the Fintech Times. So Tyler, what have you learned this week?
Thanks, Polly. Well, I was writing a really interesting story about Wahid. I think that's how you say it. And basically, they've opened a new bank branch in London, which is a refreshing piece of news. And this has arrived in conjunction with its gold-backed debit card. Now, what I found out was that in Islamic finance, Wahid is predominantly targeting the Muslim population. Is that in Islamic finance, you have this thing which is against Islamic law called riba, which essentially means that products aren't allowed to incur interest, or financial institutions aren't allowed to offer interest. So for this reason, their card is backed by a gold exchange traded commodity, which is really super interesting, and it's not something I was largely aware of before. So new findings for me this week.
Amazing. And Francis, what have you learned this week?
This week, we recently looked at fintech investment in the UK and sort of predictions towards 2023. And despite a 30% investment decline in the past couple of years, optimism for UK fintech remains very high. So I thought that was just an interesting and pretty, promising story.
Amazing. And then what I learned this week is a nice little simple one. 250 fintech unicorns existed in 2022 across the world, and that seemed like a pretty significant number. So I thought that was pretty cool. But anyway, thank you guys so much for joining me again, and thank you for making it to the 100th episode. It's absolutely crazy we've been doing this for so long now in its many, many forms. But hopefully we carry on with this awesome podcast and keep talking about fintech.
Here's to the next 100.
See you next week, guys.
Thanks for listening to the News and Views podcast by the Fintech Times. Don't miss next week's episode and continue the conversations using hashtag TFT News and Views and follow us at the Fintech Times.